How I bought almost 20 units in only 2 years of committing to real estate investing. Thanks for watching. Please click the subscribe button to learn more about interesting personal finance and real estate topics. This is a video about my real estate journey. As I mentioned in other videos, I have owned rental properties going back to 2011. However, it wasn't until 2019 that my active pursuit of real estate really took off. My professional career, plus personal investment approach, and help from a long bull market, was starting to see meaningful results. I read Ray Dalio's book about big debt crises, which I recommend, and I started to think about diversifying some money into hard assets. He highlighted hard assets, like gold, as these investments would benefit from possible inflation scenarios that he presented as possible. Real estate, with rents having the potential to grow with inflation, and fixed costs on the debt side of the equation, was a sector to consider. Once I started getting closer to $1 million in equities and bonds, and my net worth was over $1 million, I really decided to lean in and diversify into direct real estate investments in a meaningful way. This was my financial threshold for starting in a significant way. It doesn't mean that it has to be yours as well. That's for self-reflection and personal goals. There are days that I wish I started sooner. In the last 2 years, I bought a 3-unit, a 4-unit, and a 6-unit building, and I have another meaningful sized deal about to close in early 2021. Each deal was a little different, especially as it relates to the financing. The buildings were all small multifamily, and brownstone-style homes. These properties all met my internal return criteria for assuming the risk. As it relates to my financing, this was a great opportunity to work with a few different banks and lenders, to understand their approach, their underwriting appetites, what they look for, and help refine my tools for evaluating deals. The 3-unit was a straight 20% down, residential mortgage with a local bank. Pretty simple. 3 apartments and healthy cash flow after a few early repairs. The 4-unit was a seller-financed deal. Off-market. The seller wanted to continue to receive a monthly payment, but wanted to get out of the management game, and into retirement. We were able to find a way to structure the deal so we both are satisfied. 25-year term, low interest rate and low down payment. This deal was somewhat of a burr, given I had to put up a new roof, and renovate 2 vacant units. Hence the low down payment, to use the cash to make these renovations. The 6-unit was a commercially financed deal. With a local credit union. 20% down. This deal was an interesting learning experience about the commercial lending process, the difference in timing, and loan terms in the commercial space. This was an opportunity to get a below-market property with an attractive entry price and a few different exit strategy possibilities. These properties all cash flow around $400 per unit per month. With the opportunity for the 6-unit building, to start seeing meaningful cash flow growth in the next 6 months as the turnover occurs. This portfolio is self-managed now, with a heavy emphasis on technology and third-party partners to manage the day-to-day issues that arise. I think investors make their money in real estate in a number of different ways. But as for my approach, it is on the buy. When priced correctly, and the right hold duration, these deals will produce both cash flow and equity. If you are looking to mirror the same approach, make sure it's the right deal. Don't be afraid to let a lot of deals pass until you find the right one. Recognize where we are in the real estate market cycle. As they say, trees don't grow to the sky forever, so I suggest other buyers should be careful as well. I am still on the hunt for more opportunities, and underwriting a considerable amount of deals each week to find the right one. My goal was 20 units, but it might be time to set a new goal. Here's to 50. Thanks for watching. Please subscribe and like below.